Good morning and welcome to Market Day Report. I'm Chris Swift. We had a kind of quiet overnight the weekend last night on Sunday night. Didn't see a great deal of market activity, and we'll start out this morning when we get ready to ring the opening bell up a quarter on the March corn at 445 3/4, less than a 3-cent range for the whole session. May unchanged on the day at 456 even, and the July contract down a quarter at 464 even. So soybeans have done anything? Kind of sorely mixed here. Got March up a quarter, 1213 and a half. The May down a quarter at 1222 3/4, and the July contract down a quarter at 1231 3/4. Chicago wheat, it had been a little bit softer overnight, still is, down 4 1/4 on the March, 589 even. May down 4 1/4 at 599 1/4. July wheat down 3 3/4 at 606 even. Kansas City hard red winter wheat, it was soft as well, down 4 on the March at 604 even. May down 4 1/2, 607, and the July down 3 3/4 at 610 1/4. And we'll wrap it up with Minneapolis spring wheat, up a quarter on the March at 695 3/4. May, $7 3/4, down 1 1/4, and July, $707 3/4, down 1 1/4. I'd like to invite my guest in, Brian Hoops. Brian is with Midwest Market Solutions. And Brian, from Friday's close to this morning's opening, there hasn't been a great deal of activity out there. Tell us something good and interesting this morning.
Good morning, Chris. Yeah, it's very limited as far as news for our grain markets go. I'm looking at weather in South America, and the last 10 days have been very impressive as far as rainfall totals in northern Brazil. You're looking at anywhere from 3 to 9 inches of rain. So there's a lot of talk in the market that there's been a lot of replant of some of the crop that had got drought-type conditions early. And so I think the market feeling is that the downside production numbers have really found a bottom, and we're not going to see a lot of production losses going forward because of this increased rainfall that has been seen. On the flip side of that, you have Argentina that's starting to dry out. And I think it's interesting that meal is down this morning because you remember last year when we really dried out Argentina, they had a drought, reduced the size of their crops. Soybean meal here in the United States exploded to the upside because we increased our demand so much. And so to get a rally started here in the soy complex, probably going to be led by meal. But right now, this morning, we're down fairly hard in the overnight trade, despite that drying trend for Argentina. So it's something that I think bears watching. If the meal bottoms, look for soybeans to follow suit and bottom as well.
And it seems like there's a little bit of division between what the two countries crush for. Here in the U.S., we're looking to increase our crushing due to the soybean oil, biodiesel fuel. Down south in South America, Argentina, primarily into the meal content there for export. Is that correct?
Right. Yeah. Meal generally is the number one exportable commodity for Argentina. They lead the world in soybean meal exports, which is why when they backed out of the market last year, they were forced to because of that drought. The U.S. really stepped in, and we saw a big increase in our crush and then exporting a meal, as well as a big increase in soybean exports to kind of compensate for what Argentina lost. So, yeah, that's something I think that, is at least should be on everyone's radar going forward, is that dryness that's starting to develop in Argentina after last year's drought. If it continues, then you're going to see, I think, a pretty sizable rally in meal, which will help support the soybeans as well.
And the bulk of that meal is exported to China. Is that correct?
Yes, they are the number one buyer, and we saw a fair amount of soybeans being exported as well as meals exported last year. I think we talked about this on Friday after the export sales number. China did make a private export sale announcement, but they also canceled some exports in that sales report that came out Friday morning. Almost 11.9 million bushels that were canceled and then repurchased at cheaper prices is where we're seeing them now. And so they are, in that mode where they're going to cancel some purchases that made at higher prices and try and buy them at cheaper money here as we see some weakness during this South American growing season.
Well, and clearly there's a big enough spread. We were trading $13.50 beans less than 2 months ago. Now we're sitting here hugging $12.30, $12.40 for beans. So I can understand that. Brian, stay with us. We're going to go away and take a real quick commercial break. We're talking with Brian Hoops. Stay with us. And welcome back to Market Day Report. I'm Chris Swift. We ended the week last week with a little bit of softer tone in the fat market. I'm anxious to see how we're going to start this morning, but we're going to start on the February at 174.37. That was down 45 on Friday's close. April down 27 at 177.37. The June contract was 174.32, down 20. Our feeder cattle market, which Friday's feeder cattle index trading was 227.26. So if you'll note, all those futures premiums are still above the current feeder cattle index. Jan was down 82 at 230.10. March down 60 at 231.95. And April down 27 at 237.47. And the lean hog, they were a little bit softer as well, down 35 on the Febs at 70.75. April down 30, 78.15. The June contract 91.65, down 42. I'd like to invite my guest Brian Hoops back in. And Brian, you and I were talking a little bit earlier. You said it was really icy there. Can you give us about how many days that it might take to get rid of some of that ice and to get actual cattle trading moving back and forth?
Yeah, it's kind of a mess. We were in Sioux Falls yesterday and drove back trying to beat that storm and ran into some ice down by Kansas City. And, the temperatures here in the Southern Plains are going to warm up, and by the weekend will be, 40s and 50s. So it won't take long in the, in the southern regions, Kansas City and farther south. I'm afraid in the northern area where it's expected to remain colder, it could be kind of a mess for quite some time. There's a lot of snow, a lot of ice in that Omaha region down into Kansas City, and it's just going to take much more time. And we really didn't see much in the way of any cattle trade last week. Very limited numbers traded on Friday. It's even hard to get a number, and you would say steady to maybe a little bit higher in the Southern Plains. So cattle and feed report came out Friday. Right now, it looks like by the bid ask, February wants to open higher, but the rest of the month's more of a steady opening. Placement numbers were an 8-year low. So I think that tells us that supplies will be tight going all the way into at least the late first quarter, early part of the second quarter. And that's going to bode well for the market, especially on any weakness that we have. That report just pretty much was nailed by the average analyst trade guess, just almost exactly what the pre-report guesses said compared to the USDA.
Right. And so I know this snow has created a lot of disruption and actual physical distribution, being able to move the cattle from point A to point B. Seems like by the end of this week we'll clear up. I did see last week's sales and volume very, very low in comparison to weeks and months past on there. So coming out of the chute here, we got about another 3 or 4 minutes before the opening. You think that that'll be a little bit higher trade coming in for this week or a little bit softer?
Well, I think the cash probably is no better than steady this week. We would expect to see some cattle being traded, at least at steady money. I'm thinking we're going to probably struggle on rallies. We've had very light production over the last month or so because of the holidays and some weather issues disrupting our plant kill schedules, and yet the box beef has not really responded. It's been pretty unimpressive response, and now as we start to pick our kills back up and get back into the 630 kill range, it's probably going to put a little pressure against that box beef once again and hurt packer margins and probably limit the amount that they're willing to pay higher for the cash markets.
Absolutely. Well, about another 4 more minutes and we're going to know. Brian, certainly do appreciate you taking the time to be with us this morning. As Brian Hoops, he is with Midwest Marketing. And Tammy, I'm anxious to hear their opening ballot and see where we go this morning.
All right. Thanks, Chris.